Welcome to the Art of Money podcast with Art McPherson.
Art, Luke, we've been talking about interest rate hikes and now inflation also on top of people's mind. 40-year high of 7.5%. But now we're dealing with wholesale inflation. That's up nearly 10% as well. This is what producers pay before the goods get to us. So they're paying more to produce it, which means the prices go up. Should this signal a more aggressive form of income planning for new clients? And for your current clients, do they need to revisit their plans because of wholesale inflation?
Well, wholesale inflation raises the cost. So when you have cost going up, you want to make sure your portfolio can adjust for that. So you want to make sure that your income can increase as inflation increases over time. So if you start at $1,000 right now, you're going to need $1,070 this year versus last year to be the same because we've had 7% inflation for the year. So you need an extra $70 to make that same amount of money work. So as you go each year out, then all of a sudden it's $1,140, and then it keeps getting higher and higher, and all of a sudden you need $1,500 to equal what $1,000 used to be, 3, 4, 5 years ago. So you have to be careful and make sure that you've got enough growth in your portfolio and it's balanced, no matter if it's a good market, a bad market, or a flat market. When you put them all together, you want to make sure you're making a good, consistent, long-term return so that you can have a pay raise over time in retirement.
Mark, I think every week you come up with a new form of inflation. But I like this one. It's true. Just like Art said, if it costs the wholesaler more, it's going to cost us more, right? If wages go up, the price of things goes up. If their cost of inventory goes up, the cost for us on the shelves goes up. So we're seeing that a lot across the board.
I'm in the process of getting my basement redone. You remember it felt like 6 months ago, I had the pipe burst. My contractor showed me a picture of a stack of wood that we're using to redo the basement. He's like, look, man, I just want to tell you why I'm being honest with you. This stack of wood cost me about $1,000 2 years ago. This exact same wood is now costing $4,000. And that's,
Woo.
I know.
Yeah.
That's wholesale inflation.
Yeah, the price of lumber, if you look at that chart, it's way up, way down, back up. It depends what month or what 6 months you buy it at. So one thing with our clients and the way we create portfolios is you need certain accounts in your portfolio that don't lose value with the market. So even though right now we're seeing 7.5%, maybe 8% inflation, right? The market's down, right? The only thing positive right now, through the first month and a half or 2 months of the year is pretty much oil and gold. Everything else is kind of down. So if you're taking income from an account that owns, tech stocks or owns, some of these assets that have been pretty beat up, well, you're probably hurting a little bit more because you're selling when you don't want to be selling. So you need those things in your portfolio, those investments that aren't down in value, that are going to average you, 5, 6, 7, 8%. And, the dividend payers are super important right now too, because even if the Dow is down, right, if the S&P is down, but you have a 4 or 5% dividend, you may not feel like you're that far down, or at least to the end of the year, your income could stay the same.
Yeah, you don't have to sell shares either. Right. So the shares are down maybe 10 or 15% right now, but you're still getting a 4% dividend or a 5% dividend. And one of the things that Luke and I have done is we've got some models that actually increase the dividend yields up to 5, 6, 7%. So we want to make sure that our clients can get a great income stream, even if we have a depressed period like we do right now. They don't have to stop getting a check, because last time I checked, I don't think if, Mark, you were a client of ours, you would be okay with us saying, hey, by the way, market's down. Are you okay not getting a check this month?
No, I'm not okay with that, Mr. McPherson.
Exactly. Nobody wants to hear that. So we want to make sure our clients are always getting a check.
He would blame Luke anyway. He's like, hey, it was Luke's call. I wanted to give you that check, but it was...
Doesn't matter whose fault it is. My client wants their check. So we want to make sure that always happens.
772-281-5223. That's how you reach out to the team at the McPherson Financial Group. And I need a quick education, because it was this week back in 1995 that the Dow closed above 4,000 for the first time ever. So for someone that's new to the market, and we hear about inflation and we hear about the volatile market, when we hear that the Dow closed at an all-time high or it dropped to a record low, educate me. What does that mean?
When we hit an all-time high, I mean, we've hit new values on the index. So the Dow, as an example, is our top 25 industrial stocks. So the value of those corporations as a whole has hit new highs. So everything kind of totaled together is a new high. Well, when we have a correction, the value of those stocks have dropped in value. So it's selling at a discount. As an example, back at the end of the year last year, you could buy Tesla for about $1,100 a share. Right now, you can buy Tesla cheaper than $900 a share. So you can buy the same exact stock, but you can buy more shares of it. So if you sold it at the end of last year and you're buying it back right now, you're winning because you're able to gain more shares. So same kind of thing. The problem with that kind of volatility, because when we get to the end of the year, Tesla might be trading at $1,300, $1,400, maybe $1,500. So this will all be a moot point. But right now, if you're trying to do a distribution and a retirement income withdrawal, you're only getting X dollars for Tesla, so you have to sell more shares to get the same dollar in your bank account. So it hurts even more.
Right. And a lot of people think, they always want to buy the market at the low, right? I want to buy at all-time lows. I'm going to wait for the market to get to all-time lows. Well, historically, you're actually better off buying at a high, because what does the market do over time? It creates a new high, and it kind of keeps going up over time. But that's part of time in the market is more important than timing the market. It's very difficult to time the market. If you thought you wanted to get out of the market in December, well, maybe you're out of the market, but when do you get back in? So you have to be right twice. So over the long run, just like your stat said, right, the Dow was 4,000. I mean, look at it now. It's volatile this 2 months, but usually over time, the market goes up.
Well, the one thing that helps stocks and equities is if we are seeing inflation across the board, well, what is a stock? Well, you own like a Home Depot. Well, Home Depot has a lot of retail outlets, a lot of storefronts, a lot of plant and equipment property. Guess what? That property has gone up in value. So even though the earnings may not be hugely different, the inflation of their property values are incorporated into the valuation of that stock. So your book value has big increases. So that's why stocks typically outperform all other venues over the long run. So you want to have a piece of that in your portfolio, and just that you're going to run through these volatile periods, but you can't have all your money there.
Thanks for listening. Want more from Art McPherson of McPherson Financial Group? Find us online at artofmoneyradio.com. We are an independent financial services firm helping individuals create retirement strategies using a variety of financial and insurance products to custom suit their needs and objectives. Securities offered through World Equity Group, Inc., member FINRA and SIPC, a registered investment advisor. Investment advisory services offered through ProStatus Group, LLC. McPherson Financial Group and ProStatus Group, LLC are separate entities and are not owned or controlled by World Equity Group, Inc. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Investment financial professionals are not licensed in all 50 states. Art McPherson is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Arthur McPherson. Florida Insurance License number A174725.
Today's show has been a work of art.